Welcome to Dalrymple Trading. My name's Nandis. It's today, Monday, the 6th of October, 2025. Looking at the pre-market analysis for S&P 500, WTI crude oil, and of course gold. It's actually a public holiday where I am in Sydney, Australia. So a lot of our fellow traders and my students will probably be having the day off, but it's worthy to have a look at the markets today because they're definitely in swing and in action as of this morning. So just diving straight into the S&P 500, what we've seen is prices rally from the 6,700 level, hit a peak of 6,750, then we corrected. Now we're trying to push higher. So at the moment, it is still somewhat of a sideways price action to a downward based bias here. So I would still be waiting on this before I buy into this at any point in time. I think there's a little bit of turbulence ahead for the S&P 500 at this level. Clearly, once we've been able to sort of come back a little bit further down and then retest possibly 6,700 or lower, then we see continuation to the upside. That's probably the ideal scenario. Of course, it can just still rip straight up and break past 6,750. But where I'm sitting at the moment, I still have a little bit of a bearish bias on this until further price action shows us otherwise with the S&P 500. And we'll be looking at the economic calendar shortly as well for some headwinds that may impact the S&P 500 this week. But for now, I'm on the sidelines on this one purely because I want to see a little bit of a continuation action to this downside. At the moment, it's just chopping sideways, and that's not ideal for trading. Looking at WTI crude oil, what we saw is a morning gap up pre-market hours. So from the close of market last week, we saw this gap. Now, if there's anything that we've seen in gaps before with my courses and basically with what I teach, gaps always get filled at some point. Now, that doesn't mean that it's going to get filled today. This can continue for a couple of days, even a week before we come back and fill that gap. Now, I do have an upward arrow here. Now, that don't take this to literally mean that this is where price action ends. It could literally go above, okay, and then come back down. This is just an indication of where I'm thinking the short-term price action is going to go, followed by the medium term, followed by the long term. So don't follow these arrows as a guide in terms of when you should enter and exit. That's always based on your trading plan and your risk to reward profile, not based on my arrows, just to make that absolutely clear. And of course, everything that I present on these is for educational purposes only, and by no means is it actual, trading advice. It's just what I'm seeing, and basically my thoughts, my personal thoughts on where I'm seeing the market to be heading. So we've seen this gap, crude oil. So we've got this strong momentum to the upside. So for any sustainable price action, obviously we've got 61.50, which is just broken above. So we're maintaining above that for now in the hourly charts. But for any sort of confirmation that this is turning to the upside, we probably need to break the 62.20 level, okay, which is a prior resistance level, and then obviously $63. And then once we've broken above that, it's to the upside. But for now, again, this is still bearish until and personally for me, I want to see this filled. Once we've completed the gap fill and then we rotate to the upside, I'm more confident that we're definitely seeing a true move to the upside. Because if anyone was trying, myself included, I've had trades here last week which I've tried to go long on, and unfortunately I've been stopped out because it was too early for the long trade. So my personal view is hold in here until we got confirmation of this gap being filled. Sadly, it could take a week, it doesn't fill straight away, or it could fill this afternoon. We just don't know. But one way or the other, that gap will need to get filled at some point, and then we will move to the upside. And when that happens, we can have a little bit more guarantee that the move is a little bit more genuine and not just, ad hoc move. I mean, this is obviously some news level, okay, that's moving to the upside. But still, the monthly momentum still remains to the downside overall. If we're looking at it, we had that period of consolidation here and then bang, go down. And we could see another consolidation and we could see bang, go down. It's always a possibility, but for now, we trade the price action. So on the sidelines on WTI crude oil this morning. Gold, so we broke the all-time highs at 3,900, at the end of last week, and obviously we're trying to find some sort of consolidation in that area. So my short-term view is at some point we'll need to pull back again, similar to what we've had these pullbacks, and then continuation up to the upside. So gold is definitely still bullish. I wouldn't try to short this. It's a ripping bull market in gold. So again, right now is not a good place to buy. Buy it at a discount when it pulls back into the range, into the moving averages, so we can get the prices at a discount. But at the moment, it's still trying to sort of work its way up or down. It's not quite sure where it wants to go. But if you had bought down here or down here, you'd be in the money with gold for now. So you're looking for these sort of moves where prices pull back into the range, into the trend, so to speak. So it is a trend. Somewhat, if I was to say, it's a trend following strategy because you're waiting for prices to pull back into the trend, right? Into the mean, mean reversion is what it's called, coming back to the mean. I look at the economic calendar for the week. So what we see is some significant ones. So on the 8th of October, which is tomorrow, 2 days time, we've got the petroleum status report. Okay, so that should see some sort of volatility in WTI crude oil. Then we got on the 9th unemployment insurance weekly claims report. Um, Natural gas we don't trade, but it's obviously on the radar there. Um, University of Michigan survey for consumers, so that's sort of something to look at in terms of inflation and customer spending habits. CPI comes out on the 15th of October and PPI comes out on the 16th of October. So not much sort of at the start of the week, but then it starts to get busy midweek to the end of week this coming week in the calendar. So with that, I'll let you guys get on with the week, and I wish you guys all the best this week with your trading and investing. If you want to check out my work further, please visit www.dalrympletrading.com. I do provide one-on-one coaching and mentoring for those that are interested in learning to trade or to invest and basically have no idea or repeating the same mistakes that you've done in the past. Can definitely give you a free consult and work with you one-on-one as a coach to get you across the line and help you become profitable. So with that, have a good week. We'll chat soon.